Please confirm if I am audible. Please confirm if I am audible. Hello and welcome to the first class of your ACCA Management Accounting. Today we are going to start our very first topic of this subject. If you have seen my orientation session, then after that you should know that what is the syllabus of this subject, and we are going to start with the very first section of this subject. Your subject has been divided into how many sections? 6 sections. Section A to section F. Today we are going to start the very first section, that is section A, which is nature, scope and purpose of management information. So what is the section number A? It is nature, scope and purpose of management information. In this section we are going to start with our very first chapter, that is chapter number 1, management information, or you can say introduction to management information. Okay, so we need to understand what is management accounting, what is cost accounting and what is financial accounting before we start with this chapter. Okay, so now let's start with the very first topic, that is management accounting. Management accounting is the preparing financial and non-financial plan. Is what is management accounting? Management accounting is preparing financial and non-financial information to be used for supporting business decisions or for efficient running of the business. So what is management accounting? Management accounting is preparing financial and non-financial information to be used for supporting business decision or to be used for smooth or efficient running of the business. If you have seen my first demo of financial accounting, where we have talked about that financial accounting is not concerned, or it is not the primary function of the financial accounting to concern with or to provide basic information or provide primary information for the efficient running of the business. It is management accounting primary function to provide information for the supporting of the business decision or to provide for the efficient running of the business. So it is not financial accounting primary objective, it is management accounting primary objective. So what is management accounting? To provide information and to prepare information that is both financial and non-financial for the smooth running of the business. So here comes the notes of your chapter. Let's start reading what we have just studied, that is management accounting. The preparation of financial and non-financial information to support management activities are called management accounting. So what is management accounting? To prepare financial and non-financial information to be used for the business decision or to be used for the supporting of management activities. Okay, so this is the basic meaning of management accounting. How management accounting is different from financial accounting, we will study later on in this chapter only. Management accounting and in first class of FA, we have studied what is financial accounting, and we have talked about how financial accounting is different from management accounting. We will talk again in this chapter also how management accounting is different from financing accounting. Okay. Okay. Now comes our second topic of the day, that is cost accounting. That is cost accounting. Now, what is the cost accounting? So cost accounting is one of the method, or you can say method of management accounting. Cost accounting is a method of management accounting. Just like how we have studied in our morning class or first class of FA, where we have discussed that FR financial accounting is the method of FR. Financial accounting is a method of financial reporting, and in this case management accounting, cost accounting is a method of management accounting. Okay, so cost accounting is a method of management accounting where it focuses on identifying cost, a monetary valuation or assessment of resources and their allocation to products, services, inventory or other items. So it is the identification or identifying the cost of resources and their allocation to products, services, inventory and other items. Suppose I am a manufacturer of I am a manufacturer of 10 items or 10 food items that are named as A, B, C, D, E and so on up to the number of 10. I need product or you can say material X to produce A, B and E product. I need material X to produce A, B and E product. Suppose in a year or in a particular period, the total material X consumed is around 1 lakh kg, and I need to know how much of material X has been used in manufacturing of product A, product B and product E. So while knowing or while evaluating the information of how much material X is consumed in production of material product A, B and E, what should I use? I will use cost accounting. What I will use? I will use cost accounting. We will study this also in our practical chapters, that how to calculate, how to allocate everything. So no worries, we will study everything. So when this types of situation arises, what helps us? The cost accounting helps us in identifying such information and to provide such information to the management. So the management accounting is a broader term. The cost accounting is one of the method of the management accounting. The cost accounting is the function of the management accounting. Okay, so this is broader picture, this is less broader picture as compared to management accounting. So this is the basic of management accounting and cost accounting. Now, how management accounting is different from financing accounting? How management accounting is different from financial accounting? Let's start discussing each point one by one. First we have financing or financial accounting. You can write. First we have financial accounting. Second we have management accounting. Financing accounting will only deal with financial information. Financial accounting will only deal with financial information, or you can say financial data. Data will not be an appropriate word, we will use information. So financial accounting deal with financial information, whereas management accounting deals with both financing and non-financial information. So management accounting deals with both financial and non-financial information. This is basic difference between both the accounting, financial accounting and management accounting. Second, it is not the primary function of financing accounting it is not the primary function of financing accounting to provide information for efficient running of the business. But in case of management accounting, it is their primary function. It is the primary function. Although management can use financial accounting information to take decision, to plan things out, but it is not the primary function of financial accounting to provide such information to the management for the efficient running of the business. We have discussed this in our FA class in detail. Okay, so it is the primary function. Also, third, one of the most important factor, that is it is required by law. Financial accounting is required by law. Suppose Companies Act or BAT Act has asked you to make books, so it is a required by law, required by regulations. But whereas management accounting is not required by any law, it is a voluntary system to make efficient decision and to make good governance in our organization. So these are the basic financing accounting and management accounting. The main difference is financial accounting only deals with financial information, whereas management information deal with both financial and non-financial. Suppose, how much profit have I made? It is a financial information. How much profit I have made? It is a financial information which is included in the financial accounting. But there is going to be a government section. There is going to be a government section on our industry. Then this information will not be included in the financial accounting. It will be included in management accounting, where we include both financial and non-financial information. So even though non-financial information may be more crucial for you, it will not be included in the financing accounting, but it will become a part of management accounting. So management accounting include both financial and non-financial information to help in taking informed decision, and it is the primary function of management accounting to provide information to the management for the efficient running of the business or organization. Management accounting is not required by law, so it is not mandatory, but financial accounting is required by law. Okay, so these are the basic differences. We will study all the differences in detail. So let's start discussing each and every difference between management accounting and financial accounting. So all the chart that is in my left hand side are management accounting, and all the chart of right hand side are of financial accounting. Okay, let's start discussing each item one by one. First, use of information. Who uses the management accounting information and financial accounting information? So management accounting information is used by internal management only. Is used by internal management only. Suppose managers, directors or employee of the organization will use management information, because as management information, management accounting is not required by law, so you are not supposed to issue your reports to public. So it is only going to be used by internal management only. whereas financial accounting, which is required by law, needs you to release your publicize your reports to the public. So financial accounting information is being used by your shareholders, your banks, your creditors, your potential investors, your tax authorities and government. So external people who are not in the running of your business also need the information from financial accounting. So basis of usage of information, management and accounting information is going to be used only by the internal management only, whereas financial accounting information is going to be used by outsider also, suppose like shareholder, banks, creditor, potential investor, tax authority. But not only outsider investor, management can also use financial accounting information. That's why we have what only written in the accounting management accounting, but not here, because management accounting information is going to be used by internal management only, no one from outside the organization. But financial accounting information is going to be used by everyone, including internal and external. Okay. Second part, requirement to produce or requirement to maintain. Management accounting is a voluntary system. It is not required by any law, and you are not required to produce any documents to government or tax authorities. Whereas financial accounting is required by law. Whereas financial accounting is required by law, and presentation contexts are governed by law and generally accepted accounting practices. So international accounting standard, suppose international accounting standard, these are the required by law. So supposed to make your financial you are supposed to make your financial accounting as per the law required. So management accounting reports can be of any time because it is not required by law, but financial accounting reports need to be as per the government law or the generally accepted accounting practices. Okay. So these are the two basic parts of your difference between management accounting and financial accounting. Now comes to the third differentiation between management accounting and financial accounting. Content. As we have already discussed, management accounting will contain financial and non-financial both data. Management accounting will contain financial and non-financial both kind of data. Suppose how much profit have I made? So how much profit have I made will be become the part of financing information. But who are my competitors? What is the price in their market? Who is going to surpass us, or who is our supplier? What are the government law? These are non-financial information. So it will become the part of management. It will become the part of management accounting and not part of financial accounting. Whereas financial accounting deals with historical financial information. It deals with historical financial information. What is financial information? You know, suppose profit or loss or sales or cost. But what is historical means whatever has already happened will tell you about that only. So financial accounting will tell you about that only which already took place. It will not tell you about the future. It will not tell you about the upcoming events. So management accounting deals with current and future prediction, whereas financial accounting deals with only historical and past information. So management accounting deals with current as well as future prediction along with financial and non-financial information, whereas financial accounting deals with only financial information, that too of historical or past events. So these are the main differences between both financial and management accounting. Now format of information. So management accounting can take any form. Management accounting can take any form as it is not required by law. So law has not prescribed you to make report in a particular format. So management accountant can take any form, no legal requirement. Best practices are developed and used. So what are the best practices that are running in the industry is going to be used and followed. So there are no legal requirements or no legal form or format to in which management accounting reports are need to be produced. But In case of financial in accounting, presentation are required by law, like international accounting standard. So these are the standards which are required by law. So you have to prepare your financial information in that form only. Okay. Next is level of detail. As management accounting is not required by law, so it will be more detailed because management need that information to use in the business, to the use in the efficient running of the business. So management accounting are more detailed as compared to financial accounting. Okay. Or as may be required by law and regulation. If law required more detail, then more detail need to be produced. You don't have any option. But if not, then you can prescribe only that information as required by the law and regulation on the land. Then we have frequency. if if we talk about financial accounting, so financial accounting is governed by law and regulation. So whatever and how many times a law required you to produce or make reports or make information, you need to that in such form only. So usually annually or as required by law. So the frequency of information in financial accounting is as required by law or usually in a annual manner. Whereas in case of management accounting, the frequency of information and reports are going to be as needed by management. Suppose if management need a particular type of information every day, so you have to give that information every day. Suppose management required a certain type of information every week, so you need to give that type of information every week, and same goes for month or year or 5 years. So it is based on demand as required and as needed. Then comes purpose. What is the purpose of management accounting? We have discussed this in earlier also. To use in planning, controlling and making decision, because management need that information for the efficient running of the organization, for taking decision regarding the organization. So to plan things out, to control the things and to make decision, you need management accounting. Whereas financial accounting need stewardship and investment decision, where because financial information will contain only financial data, so it will help you in taking investment decision. Whereas stewardship means supervision, where you need to make certain supervision on your team, or government need to take supervision on you. So financial accounting is used there. But last but not the least, basis of valuation. How management accounting is done? It is done by standard costing, relevant costing, marginal cost and absorbent cost. These are the method techniques in costing. We will study all this in their respective chapters. These are separate chapters in your syllabus. Whereas his financial accounting only take basis in the value in only take basis on the historical cost. So whatever has already occurred or happened, the financial accounting will deal with historical cost only. So these are the basic differences between management accounting and financial accounting. I am putting the in mode so that you can have a read about all of them. Okay, so let's start with the very beginning. Please start reading. I am giving you 5 minutes break. Then we will start next topic. Okay, so start reading from here. Okay, so I hope you are done with the readings. Assessing the assessing the cost involved manufacturing or trading a product or service. Profit of rupees 2. The formula of profit will be selling price minus cost, that is my profit. What profit I need to earn, what profit I uh, what profit I want to earn is rupees 2, and I don't know the selling price. So what should I need to know? The cost. I want to know what is the cost of manufacturing this calculator. I want to know what is the cost of manufacturing this calculator, because if I know the cost, I will easily calculate how much should the selling price should be. So suppose my costing is rupees 8. My costing is rupees 8 and I want a profit of rupees 2. So my formula will be 2 equals to selling price minus 8, that comes to the selling price of 2 plus 8, that is 10. So through costing you can determine how much of selling price you should have. And not only this, costing helps you in taking many other decisions. Suppose if I know the costing of my product, if I know costing of my product and I have products in my inventory as a closing stock. So what is the value of my inventory? I can determine because I know the costing of per unit of my inventory. So I can determine the value of entire inventory that I have in my books. So this is how costing helps in taking the management accounting decision and information. So what are the main 5 areas of management accounting? First one is costing. Now let's start reading. Determination of cost is necessary to assess the profitability of product or services. Suppose I need to know how much profitable my certain product or services are. So what do I need? I need costing first, because selling minus costing is profit. So selling minus costing is profit. So costing becomes necessary when I needed the information about the profitability of product or services. And it is also help in setting the prices of the product. Like in earlier case, I need to sell certain product at 10 rupees so that I can earn rupees 2. It also helps in valuing the inventory. If I need to value my inventory, I can use the cost of my product to value the inventory. It is also used in planning. Suppose in a planning I need to make a budget. What is budget? We will discuss that also. Suppose I need to make a budget about upcoming year. Suppose I need to make a budget about upcoming year, or you can say upcoming month. Suppose I am studying in the month of January. I need to make a plan for February. So to make that plan, what should I need? I will need costing. So costing is become the main part or main area of management accounting. So the first main area of management accounting is costing. It will help you in determining the profitability of product or services, setting the price and valuing the inventory. Okay. Then comes the second management accounting. The part second is planning. Now what is planning? Planning means defining objective. Planning means defining objective and future course of action. Now what is objective and defining objective in terms of planning? Suppose my objective for the month of February is to sell 1 lakh units of 1 lakh units of product. My objective is to sell 1 lakh units of product in the month of February. This is my objective. Okay. But in order to sell 1 lakh unit, I need 1 lakh units. I need 1 lakh units in my godown. I need 1 lakh units in my godown, because if you don't have product, what will you sell? So you will need that product in your godown. How much product should I produce? So what is my objective? My objective is to sell one or my product in month of February, and I need to know how much of product I need to produce. This is because I have set my objective. Now I am planning how to achieve that objective. So what is planning? Planning is involving defining objective and future course of action to achieve that objective. So my objective is to sell. My objective is to sell 1 lakh units of product, and what I need to achieve that objective is to produce such number of units. So planning is involves defining objectives and future course of action to achieve, like setting objectives, selecting best method of achieving the objective, and plans can be financial. Okay, so in planning, the planning can be both financial and non-financial. So the best example of financial plan is budget. So what we have studied? We have studied two main areas of management accounting. First one is costing, second is planning. Costing is used to set prices to determine profitability, and the second one, planning. Planning is defining the objective and the future course of action to achieve that objective. Now comes the third part, control. What is control? Suppose control. What is control? Suppose you have planned that in February you will sell 1 lakh unit. Suppose in February you have objective, you have planned that you will sell 1 lakh units of product A. Okay, but in reality, you are running slow to produce 1 lakh units of product A. You are running slow to produce 1 lakh units of product A. So you have planned that you are going to sell 1 lakh units of product A in the month of February, but in reality you know that you are running slow in producing 1 lakh units, so you will not be able to achieve your objective. You are not going to achieve your objective. So the action that you are going to take to correct this is called control. The action that you are going to take to correct this deviation is called control. It is comparing actual versus planned. What is control? Control is, if I say what is control, then controlling is comparing actual versus the planned. Okay, so this is controlling. After planning, business or manager must ensure they are being followed and address any indeficiency. Okay, so this is actual versus planned. There are two types of control process. First, where actual performance is compared with the planning. On a regular and continuous basis. So this is not a one-time process. You need to do this on a regular and continuous process. Suppose on every Monday you compare your actual performance with the budgeted performance. So this is regular comparison. And suppose you do every day, you compare your actual performance with planned performance, that it is called as continuous basis. So the two stages in control process. First one is where actual performance is being compared with the planning on a regular and continuous basis, and if any deviation arises. Now what is deviation? Deviation means difference. Deviation means difference. So what is deviation? Deviation means difference. So if any deviation arises, you need to take corrective action to mitigate that deviation. You need to take corrective action to mitigate that deviation. So any deviation needed to be identified and correction action need to be taken. Okay, so this is the first stage in control process. Now comes to the second stage, where planning is reviewed in the light of change in circumstances. Where planning is reviewed in the light of change in circumstances. Suppose you are achieving your targets. Suppose you are achieving the production target to sell 1 lakh units product A in the month of Feb. So you are good in your place where you are actually achieving your target to produce 1 lakh units to be sold in the month of February. But a new government act, or you can say sanction, has been imposed. New government act or sanction has been imposed on you, where sale of product A becomes illegal. Where sale of product A becomes illegal. So now the circumstances has been changed, because when you were planning, the circumstances was different. So you have planned your objective like that only. But now the circumstance has been changed, where the government has changed the law or changed the regulation. So now your planning which was made on previous circumstance cannot be followed in the new circumstances. So you need to review in the light of changing circumstances. You need to review your planning in the light of changing circumstances, such as change in law, government sanction, and to assess whether objective of plans are achievable or not, whether you can still achieve your goal or not. What is the best example of it? The Russian oil crisis, where US has where US has imposed sanction on countries to buy oil from Russia. So suppose if a refinery sitting in Russia is planning to sell a particular level of particular tons or barrels of oil to other countries. So they are good in their planning. They are actually may be able to achieve it. But as per the new sanction, the sale has been stopped. So you need to assess whether the objectives are still achievable or not. Or if not, then corrective action need to be taken. If not, then correction action are needed to be taken, and modification is in the plan is required, and modification is required in the plan. Okay, so this is the two stages in control process, where first one is deals with the comparison of actual performance with the planning on regular and continuous basis, where second one is required you to plan to review the planning in the light of change in circumstance, where circumstances has been changed, you need to review your planning. So these are the first three main areas of management accounting. Read them one by one, and then we will go for the fourth and fifth areas of the management accounting. Okay, so I am again putting the screen on the full screen mode, so you can have a reading about all these areas. Okay, so I hope you are done with the reading. Now comes to the fourth part of management, fourth area of management accounting, that is decision making. Business or manager uses information to make decisions such as investment decision, financial decision, and what to produce and how much to produce, etc. Now, what is decision making? Suppose decision making. Suppose you have two options, option A and option B. You want to take a you want to take a loan. You want to take a loan for funding your business. You have two options, option number A and option number B. Now, if I ask you which option you are going to select, if I ask you which option you are going to select, so you don't have any information to select any of the option. You will say, sir, I need at least some information to support any of the option. So I will give you information like interest rate. I'll say option A is giving you loan at a rate of 9% per annum, whereas option B is giving you loan at the rate of 11% per annum. So now if I ask you what option will you choose? So now you can be able to say, sir, I will choose option number A because the rate of interest in option number A is much lesser than as compared to option number B. So when I have given you information, you are able to make decision. Now, if I give you further more information like collateral, if I say option A needs 200% of the collateral of the loan amount. Option A requires 200% of the collateral of the loan amount, whereas option B will only require 80% of the collateral of the loan amount. So now, if I ask you which option will you choose? So now you have two options, because if you look for the interest rate, option A is looking favorable, whereas if you look at the collateral of the security, you will say, sir, option B is more favorable as compared to option A. What is collateral? Collateral means mortgage. Collateral means mortgage. So option A requires you to mortgage 200% of the loan amount. Suppose loan amount is $1,000. So you need a mortgage of $2,000 in this case and $800 in this case. So if you look both the information, so as per interest rate, option A is favorable, as per mortgage or collateral, option B is favorable. So whenever I give you more information, your decision will change. So what management do? Management uses information from management accounting to make decision. What management uses? Management uses information from management accounting to take decision, such as in financing decisions, such as financing decision from where to take finance or whether to take finance or not, from where to take finance or whether to take finance or not. Also, suppose in another case you are required to set up a plant. You are required to set up a plant of production. Now you have again two options, option A and option B. Now if I ask you which option you are going to choose, option A or option B, so you cannot choose any option because you don't have any information used. So I'll give you the information like costing. Option A is going to cost you $1 lakh, whereas option B is going to cost you $2 lakhs. Now, which option will you choose? You will choose option number A because it is less costlier than option number B. So whenever I give you information, you will able to use that information to take decision. So management uses information to make decisions, such as financing decision, and in this case where plant is need to be established, investment decisions. Okay, so management using information. Which information? That has been arrived from management accounting to take decision. Now comes another example. Suppose you have option to produce and sell either product A or B. You have option to either produce and sell product A or either produce and sell product B. Now if I ask you which product you will choose to produce, A or B, you don't have the option to produce both. You have only one option, either produce and sell product A or either produce or sell product B. Now if I ask you which product you are going to sell, so still you don't have any data or information to take decision. So I am giving you the information such as demand. I am saying the demand of product A is higher as compared to option B. So if I'm giving you the information regarding the demand, so now you can make decision that said option number A is looks more favorable because option A has more demand as compared to option number B. Now I'll tell you profitability. Now I'm going to give you information about the profitability. So I'm going to say product A has more profitability as compared to product B. I am going to saying product A has more profitability as compared to product B. So now you have two information. So as per first information of demand, option A looks favorable, whereas as per second information, still option A looks favorable. So your decision changes as per the information. Suppose in this case only I change the information that option number A has less profitability, whereas option B has more profitability. So then you will choose option number B. You will choose option number B. Now I am giving you one more information like time required to produce product A and product B. So product A take less time, whereas product B take more time to produce. So whenever I give you information, your decision is going to be changed, and the information that you are using to make decision is being given by the management accounting, so decision making means what to produce, how much to produce, and etc. So the fourth main area of management accounting is decision making, that is where manager or business uses the information arrived from management accounting to take decisions such as investing decision, financing decision, and what to produce and how much to produce. These are the four areas. Now comes to the last but not the least, performance evaluation, where the performance of division or employee can be assessed by comparing their actual performance with the planned performance. What this means? Suppose in an organization, suppose XYZ, you have many divisions such as production, sales, and service. You have three divisions. You have planned some target, you have made plan and targeted some estimator, or you have set some objective or goals that you are going to produce 1 lakh units for target for which division? Production department. And for sales you have a target of selling 80,000 units, and for service division you have a planned target of to service 20,000 units. This is your planned, this is your planning. Okay, but when you compare it with the actual, when you compare this planning with your actual performance, you come to know that production department has only produced 90,000 units. Production department has only produced 90,000 units, whereas sales department has only been able to sell 72,000 of units. So plan versus actual we are comparing, where production department has been given a plan that you are required to produce 1 lakh units of product, where in reality or in actual only 90,000 units were produced, whereas in sales division the target was to sell 80,000 units, but in reality or in actual the total sale was about 72,000 of units. Whereas when it comes to service division or service department, the target was to service 20,000 units, but in reality they have serviced 25,000. So when you compare your planning with your actual performance, you come to know that this is adverse or not favorable. This is also adverse, not favorable, whereas service department was in a favorable position. Okay, so this is how you do performance evaluation of your division and your employees. Okay, so what we have studied till now in the first class is what is management accounting, what is cost accounting, how they are different from financial accounting. Then we have studied the differentiation and all the points, and at last we have studied the main 5 areas of management accounting, where we have discussed the what are the main 5 areas. First one is costing, second one is planning, then controlling, then decision making, and last but not the least, performance evaluation. These all required information, and from where that information come, that information came from management accounting. That information arise from management accounting. Okay, you might feel that this is how such a theory chapter and we are feeling sleepy. No, this is the most practical chapter after financial accounting in your knowledge level, because only some chapters are fully theory, others all the chapters if you look are completely practical, because you need to study standard costing, where you will have practical question, will have practical formulas. Then you need to study marginal costing, you are required to prepare budget, you are required to prepare a reconciliation between financial accounting and management accounting, you are required to produce cost sheet. So this is the one of the most practical exam in your knowledge level after the financial accounting. This is no theory. So if you think that this is a theory, this is no theory. This is only 1 or 2 chapters are theory, which I need to cover first, so that you should know what is management accounting, what is management information, what is cost accounting. Then when we will know what is all this, then we will switch to the practical part of this chapter. So let's conclude this class. This is all for this class. We'll study further topics in the upcoming classes, which will also going to be live on YouTube. Please drop your valuable comment and feedback in the comment of section of this video, so I can give improvement on that suggestion. Also, please join Telegram community as given in the description and WhatsApp, so that you will be